What's up YouTube? Taty FOREX in the house! I hope you had an amazing week. Today I'm going to bring you a topic that I think can be very valuable to many of you. That is going to be how to exit your trade. So many of us think about what is the entry model, what is the entry zones, how can I enter on a trade? And the question is, okay, what about getting out? Imagine you get into a house, you close the door, you manage to get inside that house. But if you don't know how to get out, would you ever go in? So that's the question, right? So would you ever enter on something if you don't know the best way to get out of it? The problem of the majority of us is exactly this. In terms of trading, if you want to treat this as a business, you need to know how or what is the best way to keep money inside your pockets, to stay profitable, to protect your capital, and so on. That's why today I'm going to talk about the three main ways of closing partials or moving your stop loss, so you can actually protect your capital and be as profitable as possible. You know how it is already? Get yourself really comfortable because the show is about to get started! So the first one that I'm going to tell you, it's my own exit plan that I'm doing at the moment, which is closing partials at 1 to 4R. I open my trade, I place my stop loss, and I place my take profit. And I want to make sure when the trade drives until 4R, it will automatically close 25% of the position. What will this do? If the trade reverses from this point, right? What I make sure is not only I will close my trade at break even, so no loss. When the remaining of the trade hits the stop loss, so the other 75%, I will guarantee that not only I'm break even, but I'm also covering the commission, so I'll end with a little profit. Why is this important to me? Because in my plan, I trade a lot counter trend moves, because I tend to see that when the movement is more corrective and when there are more opportunities to get in. So once I'm trading counter trend, we know that at any point, price may just reverse to go with the expectation order flow. So this is why I use this method. So what I'll tend to do next for the other 75%, sorry, is I either completely close it at 10R, because 10R a day keeps the debt away. Yeah, so I either close the other 75% at 10R, or if there is a significant demand here, I may put my take profit at the top of the demand or to a specific refined sell to buy, okay? But normally, the majority of the times, I tend to put 10R. When do I put take profit different from 10R, so smaller than 10R? Well, if there is a demand above, so I will be okay to play this. Or if we're playing continuations and we're getting close to the demand zone and the last continuation doesn't give me a 10R. How do I do it on MetaTrader? That's what I'm going to show you right now. So let's pretend I'm opening a trade with all the criteria. As you see, I use the position size calculator. It is all set up. This is not going to be a video to go through the position size calculator and how to set it up. I'm going to do a pending, right? And let's pretend I'm going to open a pending order here with the 2 pip stop loss. Then when I hit this button, it will automatically drive my take profit line, the first take profit, to where is the 4R thing. Let me open this account because otherwise you won't see like the money and all that. So you see, as the moment I click here, this automatically drives here. I know this is saying 2.89R. This is set to be 4R. If you see the distance here, you put it 4 times and it is right here. Then you can put the other trade at 10R. That can be here. So this is it. If now I click Control X, which is my shortcut to open this trade, it will open 2 trades. When we open a trade like this, when the trade closes at 10R, what will be my profit? So if I open a trade and I'm risking 0.5%, and if only 75% of my position is going to be 10R, we're going to do very quick math without counting the commissions, of course, right? So if 100% of my position closed at 10R, we would have 10 times my risk, right? Which would be 5%. So if full volume was closed at 10R, this would equals 5%, right? So once I'm only doing 75% of 10R, this will mean that the full result will be 7.5R. What means that instead of having 10 times my risk, I will have 7.5 times my risk. This will equals 3.75%. But I still have the remaining 25% closing at 4R. This equals 1R. So what it means that this will be plus 0.5% because I'm only covering the risk that I took. So the result of this trade, instead of being 5%, will be 4.25%. So basically, every position I open in order to cover my risk, it will always be minus 0.75%. And depending where the further the profit is, the less is going to be my total result if I close with full volume, right? What are the pros of this? So basically, I think the pros are I cover my risk soon. I protect my capital if the trade reverses. I can enter in continuations after the first trade hits 1 to 4, risking only what I was risking in the beginning. So by this, I also mean I don't move my stop loss to break even. So this is my break even. The 25% close, it's my break even. It's the same as you moving your stop loss to break even. So what are the pros of that too? When I don't move my stop to break even, if the trade comes here to mitigate something in the extreme, to continue down again, I make sure I remain in this trade. What are the cons of doing this type of exit plan? When you typically move your stop loss from certain zones, you're also making sure that you will be profitable in this trade. So imagine you did this and you moved your stop loss to here. If the trade reverses before it hits your take profit, you're going to make sure that you bang some R here, right? Not moving your stop loss is you don't lock some profits and you don't make sure that you're going to be profitable in this trade. I don't trail my stop loss, so normally I have a fixed TP, so it's not good for swing trades, right? Because when you're trailing your stop, you're making sure that you can keep on that trade and keep on that trade for a long period, and that you can make lots of R. So this is not a scenario for swing trades, because this is a quick get in, get out, bank your R, and that's it. That's how I do it. So we're all done here. Let's erase this. Let's go to the second type of exit plan, which is moving your stop to break even. So what you do is let's pretend we're in this trade with a low take profit, right? And
Hey, don't forget to like, subscribe, and hit the notification bell, okay? And share my video with friends and family, please. Okay, keep going, keep going.
And what some people tend to do is the moment there is a 1 minute break of structure or 5 minute break of structure or 15 minutes, let's take this as example, for instance, when there is this break of structure, people move the stop loss to here. So it's break even already. This is a very easy way of managing your trade. The only thing you have to do is a price alert here. So the moment it breaks the structure, you go to either your MetaTrader on your phone or at your desktop and you move your stop loss to break even. So it's quite easy to do. The pros of this is you assure no losses if there is a boss. Another pro is that you're trading with a full volume, so you know exactly what your outcome is going to be, right? If it's 10R, it's going to be 10 times the risk that you did. So if you assure no loss, so you're also protecting your capital, right? You can also enter in continuations and make sure that you won't lose money on the first one, especially if you only enter on continuations after the break of structure, right? Now, the cons basically is if the trade comes to mitigate the extreme, you will be stopped out. Just imagine my stop loss is here. If I move my stop loss to break even, look what happened after. So boom, it melted. And what happened to me? Well, I was stopped too early because with the simple fact that price came to mitigate the extreme. So if price just mitigates this and then continues dropping, because it may happen sometimes, price comes to mitigate the extreme again, filling all this void of liquidity in the middle, and then it continues melting. And what happens is we get stopped out too soon before the trade hits our take profit, and then we see the trade going in the direction that we were expecting, and we bank no money. Yep. The other cons will also be that you have to manage your trade. So you'll have a price alert, and then you have to manage your trade and change your stop loss. So if you don't have time, if you're doing something else, it may ruin your exit plan. Obviously, any type of exit plan that I'm saying here can be mixed. So you can also close your 25% at 1 to 4 and also move your stop loss. Everything can be mixed up, right? So I'm just telling you what are the main exit plans that I tend to see, and then you'll see what works for you the best. Another way is trailing the stop loss. There are a lot of types to trail your stop loss. You can trail your stop loss based on a 4-hour structure, on 15-minute structure, on 1 minute structure. It depends on you. So basically what you may do is every time there is a significant boss or every time there is a significant flip, you move your stop loss to the high that caused that either the break of structure or the flip. Yeah, let's pretend I'm putting a long here. So if I put a long here and put my take profit over here, right? So what we may do is every time there is a boss, we'll move our stop loss. So there was a boss here, I'll move my stop here. There was a boss here, I'll move my stop loss here, I'll trade my stop here. There was a boss here, I'll trade my stop here. There was another boss here, I'll trade my stop here. Okay, so this is the option that will let you protect your capital the most, right? So if you're trailing your stop loss, if anytime this trade decides to reverse, it's actually going to be protected because you're trailing your stop loss to significant zones that cause break of structure. Obviously, if you add that zone, broker structure, swap liquidity, and all that, you'll increase the probabilities that if that low is not going to be respected, it's because the order flow is going to change, so you're locking some profits. So the pros and the cons of that is also you assure your profits. You don't lose money on this trade if the trade gives you reason to move your stop. You have full volume running. It's the same pros as moving your stop loss to break even, but you're assuring your profits increase along the time. Another cons is, again, you have to manage your trade. And if price mitigates something below your stop loss, you're out of the trade. earlier. So yeah, basically this is it. So what is the best and the worst? No method is the best or the worst. No method is more valid than the other at all. You need to see what works for you best. Because for instance, you may have the first method I told you for counter trends, and then you may have this third method of trailing stops for pro trends. Test it yourself, see how it works. I hope this brought some value to you, because it's very important to have an entry plan, but it's also very important to have an exit plan. It's very important to know, when should I move my stop loss? Should I move my stop loss? Why should I move my stop loss? When should I get out of the trade? When should I close my trade? So the exit plan is very important to make sure we're making money, because the more greedy we are, the less money we're going to make. That's why I tend to see these 10 Rs very, very profitable, because instead of just shooting the moon this take profit because it's super pro trend and it may hit the daily, which is completely doable. But I prefer taking small steps and assuring the profits rather than just to shoot the moon or the hell. At the moment, this is what suits me. Once I had so many questions about it, that's why I'm sharing this to you. And that was it, ladies and gents. I hope you enjoyed it. If you don't know who I am already, my name is Taty, also known as Wealthy Chaser, and basically I created this channel so I can bring you all the full transparency about Forex journey. Our job is to keep putting the effort every day, is to keep working every day, and God will definitely reward us with the best of the best results. Don't forget to like, subscribe, and hit the notification bell so you can be up to date with all the content I share. Also, here's my Instagram channel. I share a lot of things there, lots of inspiration and motivation, at least I try to. Down at the description you will find my Telegram channel, where I'm showing every single trade I take from Explicit FX Tokyo.
So just like this.
So yeah, now I'm going to say the last phrase with Tokyo here by my side. Gratitude is the fastest way to raise your vibration so you can attract the life of your dreams. Take care. Peace out.